clicked on this video, you probably searched up the same thing that I did, which was how I turned $100 into $1,000 in the stock market. And you see all these different influencers and these different people, and you click on them, and they're all talking about, oh, invest into this, invest into that, and they don't really give too much explanation, and they kind of just show that they're making money. I'm not going to click on any videos because I don't want to get copy striked, but a big thing that I kind of saw, and as a trader myself, was that a lot of people are like, oh, just do this, do that, whatever, it doesn't really matter, you're going to make money, yada, yada, yada. Well, the problem is that a lot of these videos are just not right, or they're not great advice. Now, obviously, Mark Tilbury, he has great advice. Gary Vee obviously does not have great advice, right? So it's a lot of these people that are just not real fair. A lot of people who start with $10,000, who start with hundreds of thousands of dollars, and then they tell you I make $1,000 a day. Well, it's really not hard to make It's not really hard to make $1,000 a day if you have $100,000. You know, it's not real cool. A lot of these, in fact, some of these shorts are people losing money with $100. In fact, these little trading $100 or $1,000, she actually ends up losing money at the end of it, and she doesn't even show how she's doing it. She's just saying she did this and that and puts and this. Nobody knows what that is. All right. So this whole little series I'm going to make, and this is episode 0. In fact, if you already know a lot about trading, I would recommend just going to episode 1. But this episode 0 is pretty much just for me to explain kind of what I'm going to be doing. And I'm just going to make little videos about me trading in the morning. It's just going to be kind of like a little journey you can join. I don't care if you watch at 2x speed. I don't care. I'll try to edit it as best I can to make it entertaining. The problem is that unlike a lot of these people over here who make these big quick clips and YouTube shorts and stuff like that, they're all entertaining and they're cool and they get people to watch them and yada yada. But then you watch and you go, oh cool, whatever. I don't know how they did that, but I'm glad for them. They made money, yada yada. The goal of this little series is not to be super exciting, to be super, ooh, boom, bang, explosions. It's just to be money. Like, this is just how the actual stock market works, how the trading works. So, just to like kind of, I know I'm kind of just on this one page. I'll try to edit it some cool image. Ooh, penguins in space. I don't know. Let's just come over here. This is Thinkorswim. Thinkorswim is connected to Charles Schwab. Charles Schwab is a bank is just a bank that I trade through, and they offer Thinkorswim with their bank account, so you don't have to buy any software, and you don't have to buy any software. You don't have to buy any like lessons online, $1,000 books that you got to buy. Stupid. That's how they make money, by making you buy useless lessons. It's really 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 sad. I made my mouse big. Hopefully that helps. With anybody who can't see. Um, Pretty much, you go to Charles Schwab. In fact, I can actually pull up exactly how to do this. This is by episode 04. Pretty much just to show you guys exactly what you do. So if we just go to Charles Schwab's, so you can go to Charles Schwab's main account, not account, their main page, and you can open an account, and you can go down to brokerage and trading. You can open an individual brokerage account or a joint brokerage account. If you're going to trade with the intention of giving it to a child, maybe you're a parent and you want to make some money that you can then freely gift to one of your children, then you would make a custodial account. But just for now, you make an individual brokerage account and you'd go through filling that out. It's pretty self-explanatory. If you have any issues, just call Charles Schwab. It's an actual bank. They are a bank. They're not there to scam you. There's no fees. It's not like Robinhood where they take out a certain percentage because they're giving you information. It's a literal bank. And any money you don't use when you're trading they'll actually give you like a little bit back every day, because they actually invest your money for you, and you're able to use the money that they also invested. It's kind of a cool double-edged sword in the way that you can make a lot of money that way. You open an account, and then it'll actually ask you if you want to connect to Thinkorswim. And I would say that yes, like why would you not want to connect to Thinkorswim? It's a great software, free, and it's pretty much what most of the professional traders use. In fact, if you go to any professional trader's video. I'm sorry for switching around so much, but you can kind of see in the background a lot of these videos. These are all thinkorswim, so that's how you'd open an account, and you would bring it in. And I open an account here. This is my little account that I've opened. I've had around. It's kind of just been sitting, and I thought, why not, use this as an opportunity to teach other people how you can pretty much trade with little thought process, without any experience, realistically. And kind of just, how do you trade? Like, how does this work? The first thing I'd say is that once you get thinkorswim downloaded on your computer or desktop or laptop, I'd also recommend getting the thinkorswim app on your phone so that you can, you don't have to always be sitting at your computer. You can use it on the phone, just here and there. This is definitely a day trading definitely a day trading strategy that I'm going to show you. If you're looking for long-term investment, what I would recommend, because I have many long-term futures and investments, go into mutual funds and do not touch ETFs. Mutual funds is how you do long-term investing, and anybody who's rich, like Warren Buffett, Mark Wahlberg, all of them will say mutual funds is where it's at. Now they may vary on what mutual funds, but it really doesn't matter what mutual fund. The quicker you invest in a mutual fund, the quicker you'll get return on it, realistically. Back to day trading. I open an account. Let's see how much I put in here, or how much is still in here, I should say. There's 4,100 in this account. Now we're gonna just start. I'm sure the thumbnail is probably gonna say 5,000, starting with $5,000. There's 4,000. Whoop-de-doo. This guide is really to kind of cut out the whole need to have this dedication, to have all this knowledge. You really don't need all that, and you really just need to set a goal, and it'll just be super, super, super easy trading. And hopefully this video I'm going to cut around. Hopefully this makes sense. I'm just kind of ranting right now. But to begin, this kind of episode 0, which again, I'm going to say one more time, most of this video is going to be me explaining what I'm going to be doing over the series and how I'm going to be doing it and what kind of techniques I'm going to be using. So there's going to be using a couple different techniques, and they're all going to kind of blend together. But you can use each technique individually, or you can blend them together to get more guaranteed results. A big thing that a lot of people struggle with is they start with $100, and then they start trading, and they see that they're big. The big money people are making tens of thousands of dollars each day, but you're over here making like $5 a day, and you're like, what the heck? And you go and trade, and you don't pull out, even though you made 10% on $100. You don't pull out because you look at it and you go, I just spent 3 hours to make $10. That's stupid. I'm gonna let it go up even further. But it doesn't have that grab. It's not gonna go up 50%. Even if it went up 50%, you only make $50, and you're gonna think to yourself, what the heck? Why am I not making 10 grand? It's because you only have $100 in there. Okay, $50 is a lot of money to make if you have $100. Okay, if it is 10-20%, you're taking like 30% could exist in some world, but you don't have the special. Don't have the experience to know if it's going to go to 30-40%. You don't understand if it's going to go past 5%. That's what the strategy is meant for. This strategy will just tell you exactly what you need to do, and we're just going to do take profit is all we're going to do. We're just going to take profit. Okay? We're going to take profit every single time. Okay? Every single time, we're just going to take profit. That's the goal. Just make money on every trade. That way, we can guarantee that we don't lose money, and that way, when we need money, we can take money out of our account, which I recommend against. However, if you need to borrow against your investment account, it's totally okay, and I'd rather you take money out of your account after making money than losing money. So the biggest part of the strategy is really just make money on every trade. That's our goal. And if that means making $50, then that's making $50. And you know what? $50 may not seem like a whole lot of money. And when you have, if you have 5 grand, 4 grand, like in this account, then $50 is only 1%, right? But that's okay. 1% a day is 365% over a year. In fact, it's actually more than that, realistically. because of the compounding interest. So making a percent a day is really good. Really just gonna take profit. And in fact, I really, really, really think that, and that's just how I feel, and that's just how I've always traded. And I took, a hundred. I took about 10 grand after working as a waiter and as a food runner and as a guest service worker at like Topgolf. And I took 10 grand and I turned it into 350 grand, right? Over 2 years, right? And that's just from my 1% a day, 2% a day goal. I will not stop advocating for the fact that take profit is the best technique. And that's just you're up, you stay up, and then it hits the top of the RSI, or it hits the top of the bar, or it hits a point where it's stopped going up, you're going to sell because it's going to go down. And even if it slows down and then continues going up, you still made profit on your money. Okay, the second thing we're going to bring up, the second thing here is kind of the bigger one, which is that do not regret selling too early. In this strategy, do not regret selling too early, because you're going to regret losing money a lot more than you're going to regret being the possibility to make more money. Many, many times, many times, and I still to this day have an issue with this, which is that I pull out, I'm up 2, 3 grand, I pull out, and then the next 10 minutes I could have made an extra 3 grand, I could have made an extra 4 grand. That sucks. But there's also been times where I go, I'm only up 2, 3 grand, you know. Again, this is a lot larger account, so I'll use percentages to make it a little bit easier to understand. I'm up, 4 or 5%, 4 or 5, 6%, and I'm like, I know it can go to 10%, but it doesn't, and it goes down, and I only make 2%, I only make 1% on it, and because I didn't take profit, because I got too greedy. Do not get greedy. You have to have that emotional switch. You need to go, I'm up, I'm selling, and it needs to just happen. Now, when you have more experience and you understand and you have more influence on the market, right? When you have, these big guys who are trading millions of dollars, they have huge influences on the stock market. Okay? You can see big switches. For example, over here, right here, this is one person just selling, okay? This is one person, and I know it's kind of hard to see. I can kind of make it bigger. This is one or two whales just getting out. And the reason I can say that with confidence is that it was consolidating, and then one person with a lot of influence got out of the market and just sold and just was like, I'm done. Like, we're done. And they were done. And they took their goal, right? And they got out. And they left. And then that's pretty much screwed over all the people, everyone else, because they got out. Because they have that influence. We don't have that influence as a small trader. We have to follow the trends. We can't create the trends, right? The big thing of the stock market is that you are going to be following the trends because you don't create them, because someone else does. In day trading especially, one person or two people, right, with large amounts of money, or we can just say Wall Street, even though it's not just Wall Street. There's many, many traders with lots of money that are influencing it, but we don't have the influence, okay? We don't. We just don't compare like that. So instead, we need to follow patterns and we need to play for the wins, right? If we can have a winning strategy that wins more than 60%, now I could say more than 50%, but realistically, if you want to go up, it needs to be more than 60, more than 70%. If we have strategies up there with, I'll never be able to guarantee you a 100% perfect strategy, but I can guarantee you a profit every single trade, right? Even if that profit's 4 or 5%, right? You're still going to be making money, and that's the biggest thing here. Just to bring it into a one-by-one chart, kind of just to understand kind of the indicators that are on this screen. Just to start off, green bar, right? If we just zoom in here and make this a little bit easier to understand, a green bar basically means that the value, so this is a Japanese candlestick, which you can search up online. What is a Japanese candlestick if you want a better explanation of this? But basically, the green bar is what the top, if it's green, let's just get that out there. If it's green, okay, that means that the value started at the bottom of the square, And at the end of the minute, because I'm at 1 minute, at the end of the minute, it's the ending price, the last sell, or the last transaction, I could say, was made at the top of the green bar. It is the opposite if it is the red. If it's the red, that means the value started at the top of the square, and at the end of the minute, the last trade was at the bottom of the square. The green bars was the max and min price that stock was traded within that minute. So for example, in this square, the price started, right, because the last red box brought it down to 2.8. Okay, we started at 2.8. Okay, it bounced within this. The first trade within this minute was at 2.8. The last trade was at 3. And within those 60 seconds, the value of the stock is between 2.79 and 3.04. That's how that candle kind of works, okay? These gray things are called dojis, and they basically mean that the stock price didn't, like, it bounced all the way to 305, and it bounced down all the way to 295, but at the end of it, it was at 3, okay? And dojis usually show signs of reversing, but it's pretty, in this example, it did not. In this example, there was really good momentum, pushing towards the RSI, which we're about to get into. To zoom just a little bit further out, the blue line is our SMA 20. And SMA 20, which if you go to studies in Thinkorswim, and I'm sure you can, in anything that you're using, you can add the study or the indicator, SMA or simple moving average. Okay, if we go to edit studies, the SMA, I'm using a closed on the close, the price close, and the length of 20. And that's pretty much just averaging the value of the last 20 bars. Okay, so at this bar, right, just for example, at this bar, it takes the average of the last 20 bars, okay, and it gives you what it would, like, what the average of the last 20 bars. That makes, hopefully I said that right. Hopefully that's not too confusing. But it pretty much is just simple moving average. It's simply showing you the direction that the stock is moving. So if the blue line is going up, that means that the stock is most likely going up because the average is getting pulled, right? It's getting pulled above the average. So every time this bar is above the blue line is getting pulled higher and higher, right? It's getting yanked up. On the other hand, if the bar is underneath, or the average is under, like the values are going underneath the blue, right, then it's going to be starting to get yanked down, and we can see that blue is coming down. It's just pretty much showing trend. There's also the exponential moving average that a lot of people like to use as well, but I like to use the blue simple moving average for this trading strategy because it pretty much just guarantees profit, right? It's pretty much just a guaranteed profit, and it's pretty good at guaranteeing that we get in and get out at the right time. Another thing that a lot of people like to use, and I might end up in the later videos using this, is pretty much just throwing a second simple moving average in here and editing it to be length 50 and pretty much just making it maybe like a darker blue. And using that as another indicator of when to sell. And sometimes it's good, sometimes it's good. Remember, you use these lines to guarantee that the signals you see are a go, right? You're not using just the SMA to buy, because looking at the average doesn't tell you anything. It does, but it doesn't tell you everything you need to know. That's why we can't just use, right? That's why we can't just use the SMA. In fact, I really like the SMA, but we cannot just use it. In fact, the second thing we're going to be using is the volume. And I think the volume is really huge because the volume shows you how many people or how many trades are kind of weighing on the stock. So if you look here, right around here, there's a very low volume. right? Very low volume here being traded compared to how high the volume gets in the morning, right? In the morning, there was millions of shares being traded every minute, right? Versus we come over here, and there's only 90,000, and it's very, very low. Well, when volume gets low, but it's still the morning, that means it's more of a consolidation period. It's more of a calm before the storm, if you will. So what we're going to do, or not what we're going to do, but one thing you can look at is, okay, we're at low volume, all right? And then now, look at this, 800,000 shares, okay? So now we got 8,000, 800,000. Remember, 8,000 being traded, but it still went up, which means that there's more people who held on to the buy, more people who bought than sold. If it goes up, more people bought than sold, right? If it goes down, more people sold than bought. That's just a key thing to think about. So we have 800,000. Then we have another 900,000. Then we have another 1.3 million, right, to go up. Well, that means that when it comes down, right, all these people who were waiting for this top are going to sell. Now, because the moving average is so hard up, everyone who bought down here, and in fact, if you look, this volume actually matches exactly with this volume, but these people who bought at 2.8, it comes up to 3.2. That's a really good percentage. In fact, that's about 20% gain for all of those people, right? They're going to be like, I'm good with 28%. I'm good with 20%. I'm good with fucking 10%, right? So they're going to sell. So all these people who bought down here are going to sell. But all the people who bought up here, right, in this bar, right, because people have to buy for the price to go up, are going, okay, well, it fell, but the momentum's still up, and we're still above the SMA, right, that we know it's going to go back up. And so everyone here did not sell here. But then when it came up here, right, see how this volume kind of goes up, up, and even more up, right? It kind of, if you look down here, the 500,000, 1 million, right? And see how it's kind of do things curve down. You can almost kind of see, now the bars, right, the lines still match at this top. But if you look at the rectangles or the Japanese candles or whatever you want to call them, it's curving down, right? And this curving down is where everyone's going to start seeing this fall. And look, there was a big spike right here because this was a small pullback into a jump or a shock, right? It shocked up, it hit this value, and it tanked because everyone here who was waiting for this high, right, they're waiting for a certain percentage before they sell because they're also trying to take profit, right? But they're trying to take a certain percentage so it was worth their time. Are now selling, and now you have this big sell, right, and this big buy. So now you have kind of sellers and buyers almost equally, but you still have more sellers because it went red. Then you have this little buy-in because everyone here who bought, right, everyone here who also bought, because the market can't move if nobody buys the sells. Everyone here is look at this little green bar. It doesn't go up higher than this bar. So everyone here who bought is going, oh shit, I bought too late, I bought too late. And it's selling, and this is why this goes down, right? This is why we have this fall. Because everyone here who bought realizes, oh shoot, it's going down, and then you have this big fall because the people who buy here, again, don't want to lose money, nobody wants to lose money, and they have this big sell, right? And that kind of actually is the shock for the day, because after it gets this high, everyone who was trading it, you know, you got to tell the people who are up here who kind of got screwed, kind of waited for this to kind of come back up, and then sold it off, wait for it to come back up, sold it off, and then eventually, right, everyone who didn't get out here, who wanted this to come back up, everyone who's still waiting, because people want to make profit, right, and they get greedy, and they're like, oh, I'll just be patient, and it'll just come back up, because the stock market magically always comes back up. It does not. It never does. Not never, but it very, very, like, once you hit a high, right, you hit this high of 3.5, it's very, very seldomly going to go past this high, especially after 7:35, right? 7:30, 7:40. Like the early rush is over. In fact, if you zoom out, you can see that the volume always happens in the morning, right? This is the very, very, very volatile. But after that, the volume's gone. And this SMA going down connected with this little shock down, which is pretty much everyone who traded up at the earlier and everyone who all the big guys with influence who got out because they realized the stock is no longer going to make them money, left and went to a different stock. So everyone here got screwed. And then it goes down from there, right? As it goes down, people doubt that it's going to go back up, and they sell. And then people buy because it's sold. The sell took it down, to the low RSI, which I'll explain in a second, and then you have an up. And then people buy in, they realize, oh shoot, this is not going back up, I'm selling. Then it goes down a little further. Then people buy in, think, oh, that's going to be the bottom. And then they buy in, right? They buy in, and then they realize, oh shoot, that's actually not going to make any money. I'm leaving. I'm out. And then it goes back down, and then these people think, oh, this is the bottom, so I'm going to buy. And then those people actually end up being not right. Because think about it, they're not right, but they assumed that that was the bottom at the same time that a lot of other people assumed that was the bottom. So it did not go further, and then it shot up, right? In fact, a 2.3 to 2.6, again, that's about, what, 12%, 13%? That's a pretty good pop-up, right, from here, and especially because everyone here who was losing money sees this pop-up, is going to go, I'm selling here, I'm getting out. Because even if I bought at 267, I waited for it to go up to 26 and not lose a bunch of money. So now your loss here isn't a whole lot. But then you have this big shock down. In fact, that probably happened in a second, probably 2 seconds, right? So again, guessing market bottoms is very hard. You cannot guess the stock market. Now, this is very, very lucky for a lot of people. And again, this also happened because it was the end of the day. There's like a little re-rush at the end of the day sometimes because the markets, right, especially because the market can fluctuate during the day, like watching the Dow, watching the S&P 500 and looking at them and going, oh, it looks like the Dow isn't going to lose as much as it was predicted to lose today. And then you get this little rebuy in. People stop doubting, right? The stock market's driven by doubt. That's the biggest kind of thing you got to remember. Stock market's driven by doubt. If there's doubt, then they're not buying. That's why if you go over here to the live news, which I have on the left, and hopefully that's visible to you guys, but I can make it a little bigger. Just the news for BNZI. You can see that this morning had really good news. They have the news to acquire top-rated lead generation platforms. They have payrolls increased because of this is actually nothing to do with this stock, but it has to do with the S&P 500 rising today, which rises this up, right? If you look at the kind of the time periods of when these affect this market, right? So you see these 530, 650, right? If we go to 650, you can kind of see 650 hits, right? And then it drops. Why? Because people realize that, actually don't know why. Let me look. Let's look. Stocks traded higher this morning, release following the release of jobs. It fell. I think this actually did no effect on this market. Cool. Well, again, I did not watch this specifically thing today, but you can kind of look at it. These are kind of top midday gainer. Once that kind of comes out, people are selling, honestly. You get these kind of, what is it, 1056? Yeah, like 1056, you kind of get like a little rise in. Let's go to 1056 here. 1056 is here. You kind of get this top midday gainer. You get like a little up a little bit after it, and then it kind of falls harder. Because usually when people see these top midday gainers release and it's on it, people kind of sell because they're like, yeah, I'm getting out of that. I don't want to deal with that. Because people start shorting it. People start really heavily shorting top game mid gainers because they know that they're going to go down after they go up. So you kind of get this like really hard push downward, which just happens. And now it's time to explain the RSI and how we're going to put all of this together. The RSI is the Relative Strength Index, which I searched up earlier the best way to describe this to the average Joe, which I'm not assuming that you guys are average Joes. I'm assuming nothing. But because it's episode 0 and I have to explain everything, the RSI is pretty much a momentum-based indicator that shows if it's being overbought or if it's being oversold, and it gives the trader who's looking at it really, really valuable information on that it's hit the market bottom, or if it's at the market top. In fact, this is really easy to show. In fact, this is really, really, really easy to show because you can if you look, it almost matches with the stock itself. In fact, if we actually just bring this up, you can almost see, if you follow this line across, right, it comes down, the stock gets weaker. It comes up, it hits this top line, which is 70. If the RSI hits 70, you're selling and you're taking profit, right? You're never buying, never, ever, ever buy when the RSI is really strong or really overbought. 70, overbought. Anything over 70, overbought. Never buy at the top. This is kind of where we're going to really focus when we trade, and that's the RSI plus the SMA. For example, okay, the RSI is when it's being oversold, right? Now, you get the RSI. So I actually have a separate thing over here that will show me all the different ones that are currently under the SMA or under the RSI, right? But we really don't even need that. You really only need to just look at things that are being traded high. Like look at the ones that have high volume on the day. When you're scanning, just look for things that have high volume and watch them. And if they go below the RSI, okay, they go below the RSI and they have bad news, or they have good news, or they have whatever, it doesn't really matter the news, then you're going to watch it. And if you watch it, you watch it, you watch it, and it goes through the SMA 20, then you're going to buy. For example, here, it went through the RSI, it went through the 30. Now we're watching, we're waiting. It still has not gone through the SMA. Still has not gone through the SMA. It kind of touched here. It went through. Now we're buying. Okay? Now we're buying. We're buying at 272, right? We're buying here. We're buying in this minute. Okay? It went through it. It shot through it. Now we're waiting. Okay. It went back down. It's crossing down to the SMA. We're selling. Okay? There we go. Boom. 27, 28. Boom. Easy. 5%. Right there. Scalped off the top. It goes back down. We're waiting for it to go through the RSI again. We're waiting for it to go through the RSI again. It goes to the RSI here. Okay, went through the RSI. It pops up. And it goes through it. We're buying at 2.5. It comes up through it. It comes back down. Oh, whoop-de-doo. We lost 1 cent per share. Right? You come back over here. Hit the RSI. Okay, we're waiting for it to go through. It goes through here. We're buying at 2.38. We're buying at 2.4. Right? It shot through right here. Buy at 2.4. Okay, up. It hits the top RSI, right? It's whatever comes first. RSI or passes down through the SMA. Hits the RSI, we're selling. We're selling at 2.5. Okay, so we just made 2.3 to 2.5. That's 10%. Right? It's that quick, and they happen within minutes. Okay, it comes back down. It looks like we never hit the RSI again. This is post-market. We're not going to worry about post-market. Yeah, that's pretty much the whole strategy. We're just going to look at things with high volume. In fact, we can even do it over here with this. And I'm not even looking at volume right now, but volume is important. But as long as the volume is pretty much higher than it is the day before, right? So if we look here, we still have high volume, 48,000. But if we look like way before it, like this is like 100. It usually gets traded like 100. So for it to have like tens of thousands of trades, that means that their trading techniques will still work. Again here, right? You have this little RSI hit. This is in the morning. This is literally 6:30. Morning, okay? We got it. All right, RSI touch. We're going to wait for it to go through. 199 comes up. Okay? Kind of comes down. Here is where things get tricky because it didn't really shoot down it because it didn't see how it shot down, but the last ending price of that minute was at 196. Like it really wasn't lower than the SMA. It's kind of riding on it. We're not selling here. Okay? It hits the RSI, it comes up, we're buying 199. It's kind of focusing down, right? It's kind of focusing downward. We're not selling because it didn't shoot through it, right? It didn't shoot through. It came through and then popped back towards it, but it didn't shoot through and end below it, right? We're kind of on it. We're kind of right on this. We're kind of riding on the SMA. Okay, and this is because it's happened in the morning that you're allowed to do this. But it's kind of riding. Now it's above it. Now we're going to wait for it to come back through it. Okay, up. It never hit the RSI 70, so we're still waiting. It came back down at 216. Okay, we're selling. Okay, it comes down. Wait for the RSI touch. We're only going to trade once it hits the RSI. Okay, RSI touch. Now we're waiting. Now we're waiting. And here you'd actually have to wait 20 minutes. But now it comes back through. Okay. We're buying at 199. We're buying at 199. It comes through it. Okay, it's going up. It's going up. It's going up. It actually came up all the way to 208. 199 to 208. That's 5%. If you want to just have a set a goal that you make 5% every trade, you could do that. You don't have to. It comes back down. It comes back down to like 202, and you'd sell, right? And you could even sell it. And even if you, because you're selling here because even though it's only 199 to 202 and you're really not making a whole lot, and that's really only like 1%, right? If that, if you weren't going to sell there, then you have this shot down and you're going to lose a bunch of money, right? But now, look, we hit the RSI, we hit the RSI, we're going to wait for it to come back through it, right? We hit the RSI. Okay, now we're waiting, now we're waiting, now we're waiting, now we're waiting. Okay, we came through, we shot through. Okay, now we're buying, 189, up, 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 up. 193, 193, oh, and we came back down. We're selling, right? We're selling. It's okay. Now you could have not sold there. In fact, I would not have sold, but if you want to follow the strategy really close, that's what you would do. Okay, then that's kind of how this works, all right? RSI touch, all right, you're waiting, you're waiting, you're waiting. Right, this one you wouldn't have made any money on, right? This RSI here, you wouldn't have made any money. That's fine. Comes down, comes down, comes down, hits the RSI again. We're waiting, we're waiting, we're waiting. This shot through, right? This shot through, 189. You could buy right there, 189, it'd be fine. Be fine. But you could say, okay, it didn't really go through it. It kind of like lingered on it. So I'm going to wait, I'm going to wait. And then you wait for this big spike. That's fine too. So you bought at the very top of 1.9. Let's say you got it kind of unlucky, you didn't buy it down here. 1.9, well you're waiting, you're waiting, you're waiting for it to come back through. Now you have 1.95. It's kind of not, it didn't shoot through it. It kind of riding on it, you're kind of riding on it. Kind of still going up, kind of still going up. Then you have a fall here. You're like, but the SMA is going up. I'm gonna keep going. I'm gonna stay on it. I'm gonna stay on it. 204, right? And you're getting that, 187 to 204, right? And it's kind of riding on that. Now, if you want to follow really tight, it'd be totally fine to buy at 188 and sell at 194. That's still 10%, right? It's still 10% profit, and it's still really good on anything you put it. But that's how the strategy works. You buy at the bottom of the you watch the RSI. It hits the RSI. You wait for it to pass through your SMA. You wait for it to shoot. You want it to shoot down through the SMA. See how this is shot down? This shoots down, right? It's kind of lingering on it, and then this one shot through it. That's what you're selling. All right, you're not selling like here. You would sell, right? This would be a sell. Like even though the momentum's going up, you're selling because that's how the strategy is going to work. Okay. Now here's where you would do the strategy and you would regret it. Okay, you'd regret it. You go, man, I wish I wouldn't have sold because I went all the way up to 2.2. But remember earlier, if you were to watch it and you're like, oh, I won't sell because it's tickling on it, and you didn't sell, then you're falling, right? And then you're losing a bunch of money. So strategy, you just follow. You're taking profit on everything, right? Look here. It falls, it falls, it falls. We're way deep in the RSI, all the way down to 10. Okay, now we're watching, we're waiting. Okay, we're waiting. Okay, it comes through the SMA, right? It comes through the SMA. We're buying. Remember, you only buy as much as you are confident, okay? And at the beginning, you may be have very low confidence. And that's totally fine. And you could put 10 bucks on it and be fine, okay? Just know that the more money you put in, the more money you could make. Now, it comes through, okay? It hits the RSI. Okay, we're selling, right? We bought it 5.5, we sold it 6.5. How much money is that? That's a shit ton. That's 20%. Okay, that's literally a 20% gain. 20% gainer right there, right? Okay, comes down, and you would not make any of this profit if you did that, right? You wouldn't. But you're still making 20%, right? You're still making 20%. And that's where things are huge. Because as soon as you make this trade, you can leave the stock. You don't have to watch it any longer. And boom, look, 1, 2, 3, 4 minutes. 4 minutes, okay, you made 20% in 4 minutes. Any amount of money. Say you put $5,000 on, 20%, that's $1,000. You made $1,000 in 4 minutes. That's $250 a minute. Okay, $250 a minute. That is insane amount of money when you think about it, okay? Now, I would recommend trying to do this strategy with something that is going up, or at least had an up in the morning, because that means that it has the opportunity to go up again. But it's totally okay if you want to try doing this on something that's going down. That's totally fine. Totally, totally fine. Like this right here, great opportunity, right? I showed that earlier. This, not that great. It never went up. It never decided to turn. But it's okay because you don't need to know, because you only have to follow the strategy. And that's the whole thing. That's it. Thank you for watching my episode 0. This is probably the longest video that I'm going to post. I think other episodes are going to be very fun and engaging. This episode is very long because it's more of me ranting and more of me trying to explain everything. But hopefully I edit it down and I make it closer to maybe 25 minutes, maybe 30 minutes. This recording is about an hour long, so be thankful you don't have to listen to all of my ranting. But I will try to subtitle it. I'll try to make it everything I can and make it, maybe you don't want to watch audio, maybe you want to watch it to film speed, I don't know, whatever you want to do. Thank you for watching.